Hey, what's up, everybody? So today I am talking about a very, very interesting play that I don't think I've really seen a lot around YouTube. And this is definitely a YOLO bet degenerate option play that I would not recommend if you are an investor, if you are simply trying to invest in a company and you want to make money off of that. Don't do this. But if you are sitting at home and you have $15 and you want to possibly make a couple $100, then try it out, guys. I would not feel too bad if you lost $15. That would be about three McDonald's hamburgers that you're losing out on. But still, don't sue me. This is definitely not any kind of financial advice. And, this is simply a strategy that I am utilizing myself that is sort of fun, but also kind of degenerate. Okay, so without further ado, guys, I know a lot of you have been dreaming about the day where you make it on Reddit and you talk about your fat gains of $1 million, $700,000, $400,000 through call options. And yes, a lot of these stories are true. Like, a lot of these are actual positions that have gained a lot of money in the last, especially in 2021 and 2020 when the stock market was hot. Okay, so would I recommend doing these strategies? Heck no. For sure no. Right? You are basically putting money on the line that you could possibly lose. Just scroll down a little more and boom, this proves my point. The top losses of in Reddit, you'll see losses of 600,000. Guys, there are people who lost the entire savings of not themselves, but the savings of their mothers and their fathers. Guys, do not try this at home. Well, I guess you have to try this at home because you are trading options unless you're trading options outside. But anyways, that's beside the point. Guys, do not try any of this at home unless you are risking $5. And again, that's why I don't feel nearly as bad talking about these interesting option trades. Okay, so without further ado, guys, and make sure before I begin, make sure you hit that like button if you like this content. If you want me to make more videos like this, where there are some interesting plays you can do with options, make sure you like and subscribe for more. And so now, without further ado, guys, so first thing I like to do whenever I open up my stock market or whenever I open up my brokerage is I always like to go into investing.com. I'm more than anything, I'm just curious as to what stocks are popping up, what stocks are popping down. There's top losers, there's top gainers, and anytime I see any of my positions on any of these lists, I freak out. Right? If there's a position that is a top gainer, I'm celebrating. If there's a position on the top loser, I am crying. Just kidding. But I do like to take a look at this just to see if there's any stocks on it that I've never really paid attention to, and if it popped up or if it popped down, perhaps it might be a good time to buy in. But today I'm going to be talking about this because whenever a stock jumps up, guys, there could be a good reason as to why. You'll want to check on the news, so you can just go to a simple Google search and type in whatever stock, see if there's any catalyst that actually made a move. But most of the time, guys, there's not really any that good of a reason for the stock to pop up, right? I mean, yes, there are some catalysts, but sometimes the market is overreacting. And I would say a lot more times than not, the stock would actually fall back down. And so, that's where you have a lot of day traders, and that's where, you find day traders either make a lot of money or lose a lot of money, especially when they ride these positions. But instead of being a degenerate day trader, guys, we're only going to be a degenerate option trader. Okay, so let me show you how this works. Okay, so I picked out a couple stocks. This is actually just from yesterday. Okay, so these were the top gainers from yesterday, and I am calling bull. Okay, I don't think they are worth that much. So let's take a look at the first stock ticker, RDVT. Okay, so our Red Violet. Okay, I don't even know what this company does, but let's take a look. Red Violet is some random company okay, sorry guys, it's not random, but it's a company in Boca Raton, Florida. Okay, so founded in 2017. I guess I can't even pronounce that city. So Red Violet, there's not a whole lot of information about Red Violet, but we can kind of take a look at, okay, so it's a software company and big data. Okay, so it is a legit company. But guys, it jumped up, right? Yesterday, 19%. It has a P ratio of 1,350. Okay, I'm calling bull. I don't see a whole lot of news on it, so I'm thinking that this stock might fall back down. So let's go into our option trader. I'm using Robinhood because Robinhood is the recommended brokerage for degenerates. I'm just kidding. So RDVT, Red Violet. Okay, so we're going to trade RDVT options, and not every company is optionable, by the way, especially a lot of these new companies that are SBACs or just came out. They're probably not going to be optionable because there are certain requirements you have to have before they become optionable. But in this case, this one is. So we're going to take a look at what options we have. Okay, so I'm betting that the stock will go down. Okay, I don't think it's going to keep going up. It may or may not, but I do think it's going to go down. So let's go ahead and simply buy a put. Okay, guys, we can buy a put at $22.50 and open up this contract at a penny. So that basically means that our max loss, guys, on this trade is $5. That is a McDonald's hamburger or a gallon of gas. Okay, that wasn't funny. But anyway, so the max loss on this trade is $5, but the max profit is $2,245. Now, are you going to make that much money through this one trade? Heck no. The stock would have to go down to zero, right? But still, you can make a pretty hefty profit. Let's say it goes down even more. Let's say it goes down to what it was yesterday. Guys, you'll be making $50 off this trade, right? If you continues to go down a little more, your profit continues to rise up and up and up and up. Okay, so $50 off of a max loss of $5, that's still great, guys. That is a very, very good return. Okay, so let's take a look at another stock. So going back to our stock market top gainers on investing.com, I saw this other stock. Let's see where it is. EBIX. Okay, so EBIX stock. Let's take a look. Okay, so it is a let's see. It is another software company. And it's actually been around for some time as a P ratio 18.84. So this looks like a pretty legitimate company. There are some news surrounding why this stock popped up. But look at this. Imminent EBIX cash IPO a possibility. Okay, so 26%. You know, you can always take a look at the article, see if there's any actual catalyst that justified why it moved up. Okay, so you know, I don't know. Maybe may or may not be a good idea, but let's try it out. Let's see what would happen if we traded an EBIX option. Okay, so EBIX, and we're going to trade options, and we're going to do buy put. Okay, so we're going to buy put expiring. I always choose the earliest expiration date because these trades typically is better to have shorter expirations. So if we go out to the $30 mark, which if the stock basically drops to where it was before, guys, the max loss on this trade will be $30. The max profit will be almost $3,000. Okay, so you can make a pretty good profit if it jumps down a little more to, you know, a little under from where it was before, guys. Or if you want to make a little safer trade, not that it is still safe, you can just simply buy a put closer to the share price right now. So this would allow the stock just to go down a little bit before you make a profit. Now your max loss will be a lot greater, but the stock would only have to go down a little bit in order for you to profit. Okay, so and you would profit a lot more if it goes down even more. Okay, so let's take a look at one more stock. Going back to our stock list, I saw one for, where was it? CVR Energy. Okay, so CVR Energy, there it is. Okay, so there it is, CVR Energy, up 16%. Let's take a look. So CVR Energy, stock ticker CVI, has a PE ratio, guys, 93.95, and it is a petroleum refining company. Bull crud. I don't think this company is worth that much. I don't know why it jumped. Is there any news catalyst? No, there's not. So let's go back to our option trader. Let's type in CVI. Okay, so CVR Energy, we can go ahead and buy a put, and we can buy a put at the $20 mark. So this means that, guys, if this stock falls simply another 14% to where it was before, we would start to make a profit. Our max loss is $5, and our max profit is $2,000. That is insane, guys. Again, if you want to make the trade a little safer, you can go out closer to the share price. And now your max loss $85, but the stock would only have to fall down about 6%, guys, 6.8% before you start to realize a profit. And the more it loses, the more you gain. Okay, so instead of shorting stock, guys, I really think this is a much better option. So at least you're not putting yourself at that much risk. At least you know your max loss. I would never short a stock because that is just too dangerous. So instead of shorting stocks, guys, why not just simply buy put options? Okay, so I hope this content is helpful and fun for you. If you like this kind of content, again, make sure you like this video, subscribe if you haven't already. And until next time, guys, I will see you around in the next video for another fun and interesting idea with options trading.
With every star, we are born.